here in just a second. We are live on YouTube. We are live. We are live. What's up there, YouTube land? Good to see everybody tonight. Nemo, good to see you. So Nemo, I didn't get a chance to make the update video today, but what I'm going to do is I am going to talk about, I'm going to do a both at the same time. I'm going to talk about the trades that I took today, and then we will talk about all of the different setups today, folks. So we did something a little bit different last night. We talked about and we graded, you're welcome. We talked about and we graded all of the double crosses yesterday. And if you took all the double crosses with the trend yesterday, and even after the trend reversal, you did exceptionally well. Double crosses is, I mean, that's the play, guys. That is the play. We're using double crosses off of major levels, and if you limit yourself to those plays right there, you'll take fewer trades. But the trades that you do take will be much, much higher quality. So let's, I'm going to talk about the trades that I took. I took 2 trades today. I took 2. I was looking for another one. I didn't see one that I really liked, so talk about the 2 trades that I took. I took a trade right out of the gate this morning. We had a trade yesterday. I think we breached back to the downside. We did a double cross to the downside. We closed directly above VWAP. And I thought, you know what, if we did it yesterday, we'll do it again today. We did, took the trade again on the close of, what do we got, 9:31. So we're 2 minutes into the day. Took the trade to the downside, stopped it out a couple minutes later. Stopped out of that trade. Alan, what is going on? Good to see you. Tony just saying good to see you too. So we bounced around here for a few minutes. No chart, stand by. Oh my goodness. Yeah, I'm going to give you a chart. Stand by. Thank you for that. There it is. There is the chart, folks. There is the chart. All right. Do you guys see it now? Do you guys see it now? I sent it off to YouTube land. All right, I sent it to YouTube. But let's talk about that first trade right out of the gate again. So I said if I get a double cross early in the morning, I'm going to take the double cross. I did take a double cross. Same kind of setup happened yesterday morning. We got a double cross to the downside. We were above VWAP. And I took that same setup today. We're above VWAP. We had a couple of different levels directly below 623.34. So that was a level. Stopped out of that trade a couple minutes later, and I said, you know what, if we get basically that death cross to the downside, so that's going to be the 920 POC VWAP, and in this case, a major level. Okay, again, because we were uptrending, you know, we had a gap up overnight again, had a gap up overnight, and this cross back to the downside and into thin volume. I said I would put on the trade, and I did. Again, on the close of 9:40 this morning, I put on that trade because, again, we had a whole bunch of green lights. Let's talk about the green lights that we had specifically on this trade on the close of 9:40. So we rejected off of a couple of different levels up top. We rejected off of P, and we rejected off that pre-market high. So there's 2 green lights right there. And again, we're talking about 9:40, the close of 9:40. So there's 2 green lights right there. We had a 9 and a 20 cross. Okay, so there's 4. We're up to 4 green lights. We got through VWAP. There's 5 green lights right there. And we broke through another major level. So we're talking about 6 green lights. Well, what do we have from a red light standpoint? Well, we're in an uptrend. We're still in an uptrend. We can look at the 5-minute, you know, earlier today, and it was still clearly in an uptrend in pre-market. So yeah, it was still uptrend, but I said, you know what? Let's take it because we have a whole bunch of green lights on this particular trade right here. Now, this trade, for the first 5, 6, 7 minutes like that, it wasn't doing a whole lot, but we were staying below the major level at 623.34. We stayed below. That was, and VWAP, you know, the stop, you know, particular, where would the stop have been if the trade moved against me? Probably would have used the ignition candle, so the candle that got me in would have taken me out, because then at that point you can make the case that we're going the other way. You can make the case for calls at that point. So for a few minutes, maybe 6, 7 minutes. So we got 9:40 through about 9:47. So 6 or 7 minutes. It wasn't necessarily uncomfortable. It was safe the entire time. And then it finally started pushing down. So it pushed down, pushed down, pushed down. Now, right now, it appears as though the POC is sitting right here at about 622.25. It wasn't there this morning. So what we're looking for is we're looking for 622.08. What is 622.08? Well, it's a major level. I mean, that's all it is it's a major level right down here that we're looking for. We tagged it a couple of different times, and I said to myself, you know what, I'm going to take it off the table because it wasn't doing anything. It wasn't doing anything. And again, I kind of thought we were going to push back to the upside. We found really, really good support at that 622.08. And those were my only trades of the day. I took that loser back to the downside. I couldn't stay in this trade because you could start making the case for calls up above, although you'd probably want to let it close up here. But the stop was getting, it was getting away from me a little bit. So again, those are the two trades that I took. Now, let's talk about potential double crosses that would have worked out that we could have played today. This is really interesting. I was looking at, without looking at the chart, how many more double crosses did we have during the trading day? So how many double crosses did we have, and how many double crosses did we have right at major levels? And Jeff says, I never pay attention to pre-market other than overall trend, but it may have actually been better that the 940 candle was decent sized. Yes. Yeah, absolutely. And so the reason, let's talk about that 940 candle again. Let's talk about that. When you get kind of that outlier candle, what's up, Los? How you doing, Lewis? When you get an outlier candle, 50, 60, 70 cent candle, and this candle wasn't that big. It was 78, I think, 78 through 25. So it's a 50-cent candle. When you get it as an outlier, meaning you're not breaching levels, like the 9, the 20 POC, VWAP, or a major level. If you are not breaching levels, don't put on the trade because you're going to get that pullback. And when you get that pullback, it's going to get your position. Number one, on a big candle, you get an increase in implied volatility. So that necessarily increases the value of your contracts, and you get in, and then you get a pullback. So your IV goes down, so you lose value there, and you lose value on the pullback. So unless you have a specific major level somewhere in your candle, okay, and in this case we had a whole bunch of them, don't put on the trade. Leave it alone. Leave it alone. If you missed that specific trade, it's okay. You're going to get more trades, folks. You will absolutely get more trades. So the question for the group is, how many more double crosses did we have on the day today? How many more double crosses? Let's count them. Let's go through them. This is no double crosses in here. No, you can kind of make the case for a double cross in here, but although it's not, because the 9 is sitting right on top of the 20. There's nothing here. These are continuation. We got a double cross almost, but we're already below the 20 or below the VWAP. You could make the case for putting on the trade, but again, you got a red light directly below it. Okay, so there's nothing there. And again, we have to judge the double crosses not on what happened after the double cross, but what the setup itself looks like. So if we have a double cross right here, open above the 9, close below the 20, what are we looking at? Well, we got really, really good support right in here. 622.08, 622.08, there is support. That's a red light right there. And then see what happened afterwards. But again, it doesn't matter what happened afterwards. It doesn't. The only thing that matters is, in real time. We have to be able to do this in real time. Next double cross to the downside. Right, nope, that wasn't it. Well, it was right in here, 1035. Yeah, maybe pretty close right in here at 1029, but no, 1035. There it is. 1025 candle. 1025. Almost, Mike, it is so close, but we opened just barely below the 9. Just barely below the 9. Now, if you're using an EMA, it might have been a double cross. But then look at what we're looking for. What we're looking for is a red light. We got a red light directly below us, right? This is our major level. So we want to take those trades directly at the major level. So Again, the reason for taking the trades at the major levels and major levels only is number one, it's a major level for a reason, but number two, we can predefine that risk before we put on the trade. So again, major level double crosses. And here's the thing, if you limit yourself to those plays and those plays only, guess what? You will take fewer trades, but the trades that you do take will be really, really, really nice trades. So next one, 1035, right in here. 1035 right in here. Again, you are directly above where we know that we have support. Again, 622.08. We've stopped there multiple times. We had an outlier down here, pushed, recaptured, used that as support. Again, and this is the POC. The POC moved around. The POC was not here. So again, you can put on this play right here at 1035. You might be okay. It might push through that next level. But if we just look at that candle by itself, realizing that we have a really, really good level right there of support, and other than, we're below the VWAP, are you putting that trade on? We're really, really close. Now, let's say you're 25 cents away from that major. Let's say you breach a major level and you got 25 cents to that next major level. You put on that trade at that point and see if you can push through. You've got a little bit of runway, okay? So you got a little bit of wiggle room on that particular play. On this one, you had maybe about 10 cents or so. That's not enough to justify putting on that trade, in my opinion. And again, that's just my opinion. Jim, what is up, my friend? What is up? We're talking about double crosses. Next potential double cross again right in here. Well, we've got some news. We have a news happening right in here. This is where Donald Trump started talking about, we had one right here. We did. We had a double cross right here. There you go, 1044. 1044, double crossed a level directly below. 1044, you can absolutely make the case to put on that trade right there. You can. Again, if all you're seeing is this right here, we came off that major level, 622.08, and then you get a double cross to the upside. What's your target? Well, you got VWAP up there as a target, so you got 79.46, you got 33 cents or so. That's your target. And then it started pushing through. And then it ran up, and then almost seemingly out of nowhere, Donald Trump, he said something along the lines of that he wants to fire Jerome Powell, the head of the Fed. And then the market just overreacted, just whammo kablamo back to the downside. At this point, when we're in and there were a lot of people. There were people in calls off this double cross to the upside, and it kept pushing. I was looking for pre-market high. So yeah, and then again, he came in and just whammo kablamo right back to the downside. And then it kind of cooled off for a few minutes, and guess what? And then another play, not a double cross, but right at this same level, it started pushing off. And then he did it again at that same exact level. The same exact thing happens. Folks, when it's a catalyst move like that, don't trade big catalyst moves like that. You know, when you can absolutely get a whipsaw either way. Cut the mustard. What is happening? Welcome to the group. We are glad you are here. We're doing trade reviews right now. We're also live on YouTube for the YouTube land out there. So anyway, we are glad you're here. Thanks for joining us, trying out that free week. Any questions, feel free to reach out with any questions that you might have. Cut the mustard. It's a hilarious name, by the way. Seriously, good to be here. You thought maybe some whale. No, it was not a whale. This was Donald Trump. This was Donald Trump. We hit that. Now, let me show you something. Let's see if this specific level is still there. 2334. So let's look at 2334 on the 2-day. And you can see it very, very clearly right here at this level. 622.34, it's right here. Look at this shelf. Whenever you see a shelf, particularly on the 2-day, they're going to defend that position. And it was defended, and it just so happened, at that very time, Donald Trump came out and said, I want to fire Jerome Powell. So again, it rejected off there a couple of different times here, and whammo kablamo back to the downside. And at this point, I'm not trading catalyst moves, folks. I am absolutely positively not trading catalyst moves. So where did it start getting chilled out again? It wasn't until, basically 12:47, getting close to 1 o'clock. It just sounded like Peter Brady there for a second, folks. Um, and then the next potential double cross, where is it? Well, it's right here, 1249. 1249 double cross to the upside. Again, I don't consider any of these moves in here unless you're already in a trade. If you're in a trade and you get a big one that goes in your favor, congratulations. It is magical when it happens. But sometimes they go in your favor, sometimes they go against you. I know Mr. Oxlong was in calls early and it went against him. He went up from being up he was up, I think, 25% on his play to making a loser out of him. But again, that's just the way it is. It's just the reality of what we do, folks. Sometimes we can't anticipate, but hey, it is what it is. Okay, so double cross about 3 or 4 minutes. What's up, Mark? Double cross about 3 or 4 minutes into the trade, right here at 1249. So what's good about that play? Well, we're kind of in a little uptrend. What's up? Kind of in a little uptrend. I mean, we had support on the VWAP, and I know some people took this play directly off of VWAP, which was a really, really good, strong play to the upside. Again, not a double cross, but again, a good, strong, aggressive play directly off that support, then back to the upside. We were double crossing right into this 522.08. So again, we're going to take that double cross? Probably not, because again, we're waiting for that close, and when we wait for that close, directly into that level of support or that major level. Now, had we closed 3 or 4 cents higher, that would have been a good place to take that trade, because again, we are getting above that major level. When we do a 9, 20, and a major level at the same thing, there's 3 green lights right there. We're above the VWAP. There's the 4th green light right in there, folks. And again, it just ran to the upside, and it was beautiful, beautiful, beautiful. But again, not the setup that we're looking for. Not the exact setup we're looking for. We're above everything with the exception of this major level, which is yesterday's low. But sometimes, they work out. They just do. But if you're looking for the highest probability plays, take that double cross at a major level and reach the major level one way or another. Other double crosses the rest of the day, folks. No, nothing in here for about an hour and a half. I wouldn't let the stop you from taking the trade off of VWAP and DC. The POC, no. If you're being aggressive in the move, if you are being aggressive in this move, you can take it directly off of VWAP. You can absolutely do that. And as a matter of fact, we did have a couple of people in the group that did take it directly off of VWAP. VWAP. Oh, you're asking cut the mustard. Okay, gotcha. So it is an aggressive move. Again, so VWAP is a target and it is a place off of which to take trades. It is a major level in a sense that it's a target and we can take trades directly off of that. Or reversals. We take reversals off of VWAP. It's a pretty good place to take reversals. So, but the POC would not. The fact that the POC, and the POC wasn't here at the time. It was not right here. It absolutely was not here at this time. And that's what that is, the POC. It was not there. If the POC is there, again, it's hard. It's easy to Monday morning quarterback, but if all we're seeing is this right here. Oh, New Zealand. He's a Kiwi. It's really good to good to have you. Seriously, really good to see you. But anyway, yeah. Let us see. Okay. Again, let's go back to that trade right in here. Double cross to the upside. You can take it, but again, that the POC was not there at that time. So see if you can breach. Another 5 cents in that candle would have been great, and we would take that all day long. But again, on that particular trade, what you're going to have to do is you're going to have to use an ignition candle as your stop. So if the candle is good enough to get you in, it's good enough to take you out if it moves against you. Because now, if we close above that major level, it's not an issue. Not an issue at all. And that's kind of what we're looking for. on that double cross to the upside. The rest of the day, from a price action standpoint, yeah, these moves right in here, this an hour and a half where it was really, really bad price action. And then it ran up a couple of different times. It ran up here, it ran up late in the day. I mean, we had a kind of a quasi double cross here at 1537. But again, when we don't have good price action. Now, I remember this specifically at 1537. I remember it because I said, guys, there's some volume pouring in on this candle. Again, these are volume candles, so they tend to be thicker in heavy volume. So again, double cross to the upside, above pre-market high and above P. This was P. So again, there's a good play right there. So from a double cross standpoint today, folks, we had very, very few. Very, very few, and they were not the highest of quality plays. Definitely not the highest of quality plays. I'm going to check to see if I have any comments on YouTube right now. So stand by. And again, what's up, YouTube land? We got 9 watching. So we had very, very few. I'm going to mute it. Doesn't look like I have any comments right now, which is cool. But anyway, welcome, guys. So glad that you are here. What is it? That's such a great question. What time is it in New Zealand? Now this is for you. This is my updated trading strategy. It is available on 920trading.com, but it is right there also. Yeah. So what is? And again, folks, that's it from a double cross standpoint today. I didn't like a lot of the price action in here only because it was a catalyst driven move, and I'm just not all about the catalyst driven moves. It's too easy. It's too easy to get kind of whipsawed on those catalyst moves. So particularly on chases, we don't chase ever. All right. Well, who else wants to talk about anything tonight? Again, we had really, really good moves yesterday, particularly on the double cross, folks. Double cross is at major levels. Today, it was all right. Not great. 11:25 a.m. Thursday. Okay, so you're 1, 2, 3, so 5. Holy smokes. All right. 5:12, 17 hours ahead of me. Holy cow. Huh. Well, seriously, good to have you in the group, my friend. Good to have you in the group. And again, feel free to reach out with any questions. Here's the thing. If I don't know the answer to the question, I will tell you I don't know the answer to the question. Somebody in the group may know the answer to the question. I will never profess to be the smartest guy in the room. I will never profess to be the end-all, be-all, God's gift to all traders out there, because I am not. I think I'm pretty good at what I do. So yeah, and again, if you claim to be the smartest person in the room, you're in the wrong room. That is something I live and die by. Anyway, folks, who else has anything that they would like to talk about tonight? You know, last night we talked about all the double crosses. We did that. We're doing that again tonight. We also last night talked about the 20 trade challenge. And we can talk about the 20 trade challenge again tonight if you would like, or anything you guys would like to talk about. I'm not even the smartest person in the room, and I'm the only one in the room. I'll do that, Lowe's text. Jim, you got to be nice to yourself, man. We talked about that today. We talked about, and I know you're being funny, but you will be an elite level trader, my friend. You got to believe that you'll be an elite level trader. I believe you will be. I know you will be. Okay, let's talk about setting some major levels, folks. We can absolutely do that. Here's what I'm looking at in pre-market. First thing I'm looking for is pre-market high. So I've got pre-market high sitting up here at 623, 623.93. Next thing I'm looking for is pre-market low, 620.89. So right out of the gate, I know that I have about $3. I have $3 in pre-market. So again, I'm setting those as major levels. You blew your rules today, so tomorrow you get you messed up on your rules today. In other words, you didn't follow your rules today, so you get another opportunity to do it again tomorrow. That's perfect, man. And again, go with a super, super, super cheap contract. Go with a $10 contract. I am so serious about that. I do not use mechanical stops and take profits. I market into all my trades and I market out of all of my trades. So sometimes it works against me. I mean, that's just the reality. Reality, not reality, but the reality. Okay, so let's talk about the major levels again. So we have pre-market high, pre-market low. We have yesterday's low and yesterday's high. These are all areas off of which to take trades, right? And then what we're looking for is we are looking for demand zones. So I use the 30-minute chart to find double bottoms. So those are going to be demand zones down low. Those are where the price reacted in the past and it pushed the price back to the upside. Those are 30-minute demand zones. And again, we use 30-minute double bottoms for demand zones right in here. So the pre-market high happened to be really at a demand zone from a 30-minute standpoint, but it was kind of a stair step back to the downside. Supply zones like 625.14, 625.14, that's where price reacted and it came back to the downside, and I used 30-minute double tops for those. And again, we need good price action in the previous days to really get decent levels. Now, let's look for potentially where we could have a demand zone tomorrow. We got this big, again, this is catalyst, these big tails. When you have big tails or big wicks, it's generally because of one of two different things. It's either a big catalyst move or it reacted really strongly out of a strong demand zone down low or a supply zone up top. But that's how I do it. It's just a 30-minute double top and a 30-minute double bottom. He did as soon as he walked away at 10:44 today. So the comment was, and it was Jeff. He said, as soon as you walked away today at 10:44, you got your play. So let's go to 10:44. 10:44, right here. There it is, right there, 10:44. Hey, you had just walked away, man. Just walked away. But you know what? You're going to get it tomorrow, Jim. You'll absolutely get it tomorrow. And again, we just had gross price action after that for quite a long time. I'm not interested in playing catalysts. Does that make sense on the major levels? Luis, tomorrow, any chance that you are going to be in here? Well, I'm going to be late tomorrow morning, guys. I got to go to the doctor. Friday morning, if you're in the room at about 9:15, so that's going to be 8:15 Central Time. If you're in the room about that time, I will show you exactly how I do it. And I mean, I can do it right now. Again, I can delete all the lines and do them over. But Friday morning. I'll do it early tomorrow before I go to my doctor's appointment. Okay, sounds good. So Friday morning, be here by 8:15 Central Time. If you're here by 8:15 Central Time, at that point, I will start laying out my level. So what you're going to find when you find those really nice demand zones, and we talked about this a little bit last night. We will talk about, again, it's a demand zone, 30-minute double bottom, not the tails, just the bodies. That's what I use. There's not just an opinion how I use it. We also look for volume out of those specific zones. If you have a lot of volume going into a zone or coming out of a zone, generally speaking, those are going to be stronger levels out of which to take our trades. So, yeah. Okay, who else has anything you guys would like to talk about tonight? And again, nothing's off the table, guys. Whatever you guys would, I think I'm going to do this for everybody's benefit again tonight, if you guys will indulge me. talk about the 20 trade challenge and the importance of the 20 trade challenge. And again, Lowe's Text, that's Luis. Luis he's starting the 20 trade challenge again tomorrow because he broke some rules. Okay. Great, great. And Cut the Mustard, our friend from our Kiwi friend from New Zealand. The 20 trade challenge, essentially it is this, and again, this is for YouTube also, the 20 trade challenge. Number one, you have a trading plan. Number two, it's a written trading plan. Number three, it is specific. Everything about the plan must be specific, not general. It must be specific. So in that, you must have a specific reason for getting into a trade, and it must be well defined. Okay, so well defined. If it's not well defined in your trading plan, you can't take the trade. I mean, you can, but if you don't have a rule for it, a specific reason for it, why would you put it on? So it must be written down. It must be specific. So entries are specific, exits are specific, and this weekend's newsletter and video, those are going to be on exits. So we've done a lot on entries. We're going to do a lot on exits this weekend for the newsletter. Okay, so the 20 trade challenge, you do 20 consecutive trades without breaking your trading plan at all, following your rules 100%. Entries, exits, everything about your plan must be followed to the letter of the law. Your law, it's nobody else's. They're your rules, so it's incumbent upon you to follow your own rules. But 100%, if you break your rules or if you change the variables, you start over from the first trade. Kind of cool. Now, you're going to break your rules, particularly when you first start that 20 trade challenge. You are going to break your rules. It's expected. It's going to happen. If you get to that 16th, 17th, 18th trade and you break your rules, guess what? You might get a little bit frustrated, but you got to start over. I mean, you don't. It's your money. You can trade your account as you see fit, but please, please, please start over. Now, in addition to trading a single contract, we don't want expensive contracts at all. There's no point whatsoever in expensive contracts at this point. So what we're going to do is we're going to buy a very, very inexpensive contract. I'm not talking about a $100 contract. I don't care what your account size is. It doesn't matter. You could have $100,000, $200,000, $1 million in your account. You're going to start with a small contract, an inexpensive contract. It can be a $10 contract. It can be an $8. It can be a $5 contract. It has to be something so insignificant that when they move against you, or you break your rules, or you chase a trade, you get caught in a pullback, something that it doesn't hurt you in two different ways. It doesn't hurt you financially, but the bigger issue is we don't want to add to any scar tissue that you might have from trading you've done in the past. So again, a $10 contract is fine. Now, the reason why we want to put real money on the line and not just paper trade, I mean, there's folks out there that say just paper trade, paper trade, paper trade. I understand that, but number one, you don't get realistic fills when you paper trade. You just don't. That's the reality. You don't get realistic fills. And there's no emotions in paper trading like there is when you put even just a few dollars on the line. So we want to have that real feeling, the natural feeling of having real money on the line. But it has to be insignificant. It has to be such a small level or a small amount. Here's where it gets really, really fun. You're going to break your rules several times getting through that first 20 trade set. Now, again, the thing that I didn't mention is you've got to measure. You have to have a trade log to log every single one of your trades. And for the folks in the group, this is a really, really great one. It's made by one of our members, Lionel. So here it is. Again, we're giving away stuff all day long. Okay, they give away the trading strategy up above, and there is, and you use this Cut the Mustard. You're a trialing member right now. Even if you decide to not join our community full time, it's there. Please download both of those things right there. The strategy, it's a written strategy, including the 20 trade challenge and the trading journal. Yeah, so Spite Alf just says, you're welcome. Spite Alf just says, those 800 books, yeah, paid for the membership for a year. Absolutely, Luis. He's talking about a link that exists out there with 800 different trading books. Yes. So, log your trades, everything about the trade. And again, in that trading journal right there, log every single one of your trades, folks. Please log everything. If you're not logging, you're not trading. Seriously, you're not. I mean, you're throwing mud on the wall. Some of it's going to stick, some of it's going to fall. But you're going to continue losing and losing and losing and losing. So, we're going to do that $10 contract for 20 consecutive trades. Your P&L does not matter. It absolutely does not matter. Only because when you're that far out of a money, a $10 contract, you're not going to have any kind of a realistic expected value on that whatsoever. So we're not going to worry about it. But again, there's real money on the line. So you're going to break your rules a couple of different times. And then you're going to start over. And then you're going to get a little bit better and a little bit better and a little bit better. And then what you're going to do is you are going, once you get that 20 trade set, and here's the thing in the group, folks, when you hit a milestone, whatever it is, hey, I just got 10 trades, I followed my plan for 10 consecutive trades, I didn't break a single rule for 10 trades, 5 trades, whatever it is. Give us daily updates. You've one trade, it doesn't matter. Share it with the group and let the group be your cheerleader, folks. Seriously. Let everybody in the group pat you on the back for your execution. Again, the result does not matter. The result never matters. The result, we're an execution business. Now, once you get that 20 consecutive trades on those $10 contracts or $8 contracts, insignificant contracts, you're going to move up in the options chain. So you're going to go to it from a $10 contract to a $25 contract. $20 contract, 25, whatever. Now here's the really cool thing, because you had 20 consecutive trades that you didn't break your rules. In other words, you followed your rules to the letter of your law, your rules, your law, because you did that. Guess what? You're ingraining those really, really good trading habits in your brain. They're becoming habitual. You're doing it over and over and over again. And again, then you go to the 25-cent contracts. It costs you 25 bucks. And you follow the plan exactly to the letter of your law, just like you did on the $10 contract. And it's going to take you a couple of times to get through that, because you're going to break your rules. That's just reality. You will. And then once you get through that 20 trade set, remember, you already went through the inexpensive contract. Now you're moving up to a little bit more expensive contract. There's a little bit more skin in the game, but you're training yourself. You're training yourself to follow your plan. And then what you're going to do after that, you can move up to a $50 contract. So you go from 10 to 25 to 50. And then you do 20 consecutive trades on $50 contracts. Now, here's the cool thing about those $50 contracts. You're going to gain a little bit more money on those winning trades. But again, process, process, process. And if you break your rules, and you will again, you start back on that first trade. And then you get done with that. You have gone 3 sets. So you got the 20 consecutive trades at the $10, 20 consecutive trades on the $25, and 20 consecutive trades on the $50 contract. You're jamming at this point, guys. You are just absolutely killing it. What's up, Code? You are killing it. Seriously, you're killing it, and your trading is still an insignificant. I mean, $50 is still $50. But it's process, process, process. And you're sharing with the group. Hey, guys, I just had another 20 trade set. I'm moving up to a 0.5 delta. That contract may cost you $100, $150, but at this point, it doesn't matter because you're putting all these good trades. They're behind you and they're pushing you forward at the same time because it's process, process, process. Now, to go from that $10 contract to that in the money contract and get through 20 or that 0.5 delta, to go through 20 consecutive trades of that 0.5 delta, how long do you think, it's not a trick question, how long do you think it will take you to get through those 20 trades in the your 0.5 delta? Remember, $10, 25, 50, and then this is your fourth 20 trade set. How long is it going to take you? Because you're going to break your rules, and then you're going to get that 20 trade set at that 0.5 delta. How long do you think it's going to take? I'm going to check with YouTube and see what they're saying. How long do you think it'll take? Mike's got an answer. Spydow's got an answer. Number one, it doesn't matter. But, seriously, it doesn't matter. You just got to keep on going forward. Let's say it takes 4 months to get there, folks. 4 months. Again, let's say it takes 4 months. You are ingraining really, 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 really good, strong trading habits. So, and then you guess what you get to do after that? You get to go to 2 contracts after that. How long is it going to take you to go from, again, you've got a successful 10-cent contracts, successful 25, successful 50, successful 0.5 delta. So that's 4. That's all of those successful 20 trade sets. You made some mistakes along the way because that's natural. That's just part of the game. So let's say it takes you 4 months. And then you move to 2 contracts, 2 at 0.5 delta. How long is it going to take you to go through that 20 trade set? Because after 2, you're going to 3, and after 3, you're going to 5, and after 5, you're going to 7, and after 7, you're going to SPX. How long is that entire process? Again, going from 1 to 2, how long is that process going to take? Again, you got 4 months getting to that 2 contracts, right? Again, we start out super, super small. We're lifting weights. That's all we're doing, folks. We're starting with really, really light weights. We got 10-pound curls. How long is it going to take? What do you think? And again, the answer is it doesn't matter, but how long do you think it'll take? 2 years. I disagree. It's half that time, Los Tex. Half that time. Here's why. Here's why. Because those $10 contracts are the easiest thing in the world to trade. Everything starts with the $10 inexpensive contract. And then you move up and you move up and you move up and you move up. And we're getting rid of the scar tissue. So let's say it does take you 2 years to SPX. It doesn't matter. It doesn't matter. But if it takes 4 months to get to, all the process to get to that in the money, or trading that contract, that 0.5 delta, then we go to 2, and that takes another month. That's all it takes. Remember, we've got the process. It is in our head. We see the setups. We see them before they happen. The process is there. We execute. We're training ourselves to execute on that $10 contract. That's the most important step, guys, is the $10. It's the inexpensive contract. It has to be critically important. If you can't do it with a $10 contract, you can't do it with 100 SPX contracts. You will go bankrupt. I'm telling you that right now. The most important thing that you do is start with that inexpensive contract and move forward. Again, guys, I used to be a big advocate of saying, you know what, buy that 0.5 delta. It makes no sense to do that. It makes no sense. You're talking about a $150 contract, and when it moves against you, you're losing $50. You want to talk about scar tissue. You lose 50, you lose another 50, another 50. It's like you can't even pull the trigger at that point. That's where scar tissue comes in, guys. Continually losing money, and then you're afraid to pull the trigger because you just can't. You just can't. Another $50 or another $100, or you say, I got to get it back. So you go in deeper, and then you lose 100 and 200 and 500 and 1,000, and you're chasing things, and then you're throwing up your hands. I know hesitation is not your problem, Los Tex. You're famous for that. You throw up your hands and you say, I can't do this. I can't do this. And again, Sing, we talked about this today, man. It doesn't matter how long it takes. But if you get those inexpensive contracts, and again, guys, you can't. I have a dear friend of mine, that bleeds every single day. You guys don't know him. He bleeds money every single day because he just won't listen. He just won't listen. You're not wrong. Luis, you're not wrong. If your setup is there, then you pull the trigger. You weren't wrong. It just didn't work out. We got to change that. We got to change that. Nobody wants to be wrong, right? That's a hit to our ego. You're only wrong if you don't follow your trading plan and you put on a trade. The worst possible thing that can happen when you don't follow your plan is to make money, because then you'll do it again and again and again. We'll all get there, Jim. That's right. We will all get there, guys. It doesn't matter how long. Exactly. We've all done that. We've all broken the rules. We've all revenge traded. I had 11 losing trades in a row in a matter of just a couple of hours. And I talked about this last night, but it was, ripping the glasses directly off my face and wadding them up and throwing them at the wall. And doing that maniacal cry laugh and screaming at my computer, at my monitors, this is so hard. Because I was doing things that I know I wasn't supposed to do. I was getting in too late. That's the biggest thing. You get in too late, you're chasing a trade. If your setup is there, you put on the trade, irrespective of how you think it's going to go. Again, your setup is your setup. You know what it is. If it's an A+ setup, put on the trade. And then let the market decide to take you out or keep you in the trade. That's it. We're ultimately just watching lines on a screen, guys. Seriously, that's all we're doing. We're just watching lines on a screen. What is our job? Our job as traders is to pay attention to those lines and respond when the market tells us to respond. Now, responding is a positive thing. Reacting, that's kind of a negative thing. We react when a big red candle comes out of nowhere, or a big green candle comes out of nowhere when we're in puts. We respond. We turn it into something positive. But we get better every day, guys. That's the absolute key. That is the key. It doesn't matter how long it takes. Seriously, guys, seriously. $10 contract. Big deal. Big deal. That is the foundation. That is, you're laying the foundation for your future success. First bad trade is one thing, but 2 or 3 in a row, you go on tilt. Again, let's change it. Luis, we have to change the way that we talk about not only ourselves, but the way that we talk about our trades. First bad trade, meaning, and I think you're meaning the first trade that goes against you. And again, it's only a bad trade if you're not following your plan. But we as human beings, we have human emotions, right? Peter Gagan, what is going on, my friend? Matt337, what's up? We have human emotions. I'm questioning my exits for when a trade goes against me. All right, good evening. So, all right, let's talk. We're going to talk. I'm going to talk about that. I'm writing the newsletter on that, and I'm going to do the video on that. So, where do you get out when the trade goes against you? Okay, so here's the commitment you make to yourself, Mike. Mike, and that's SPY DALF, guys. That's SPY DALF. The commitment that you're going to make to yourself is you're only going to take a trade at a major level. You're only going to take a trade on a major level. Why? Well, because number one, it's a major level for a reason, but number two, and more importantly, we can predefine that risk. Trader S, what is going on? It's so good to see you. So good to see you. So take 15-minute break, and that helps. It does help, taking a break. Okay, so SPY says first trade didn't get out at 9:33 because it closed below pre-market high. I like it. Your exit was a close above. I like it. Does that seem like too much risk? I got on a 9:32 candle. So on the close of 9:31, same candle I got in. So we had a close. Let's see how far away your stop was, because I got out. I mean, when we breached, I think it was quite a long way, as a matter of fact. So we had 40 to 93. That's a huge, 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 huge stop. It's a big stop. It's a really, really, really big stop. Now, it's not a big deal on a $10 contract, but we must treat each individual trade as though it's the most important trade we'll ever put on. If you wouldn't trade 100 SPX contracts, you shouldn't trade a single SPY contract on that play. You shouldn't. Each trade must be treated with respect and as though it is the most important trade that you will ever, ever, ever put on in your life. Period. It is a big stop, but it was just running away. That is true. That is, I will promise you, can confirm on that one, Jeff. It was a big stop. That was my stop on the play, and it was way, way, way against me. So it just is what it is. 9:32 started printing now. Yeah. So you got in right in here, 9:30. So we had the close of 9:31, the open of 9:32. That's exactly when I got in. And again, you didn't breach. That was your predetermined level of risk. So as long as you are consistent with that, if you breach that and get a close over that level, you got to take yourself out of the trade. You must take yourself out of the trade at that point. Question about major level. Let's say I have a major level line on a chart. Candle come and touch it and start going. We're supposed to, 920 is still behind catching up. Should we wait for it them to come closer and then take the trade, or just get in there? Sometimes if I wait, risk gets bigger and the candles are far now away from touching your level. Okay, here is, so essentially that question is, if I get, here's the perfect example. I will show you the perfect example of that particular trade, exactly what you're talking about. So let's talk about 1247. So this is 1247. You're getting a signal right there, right? You have a major level line on the chart, so that's, we're going to use VWAP as that. Again, we use VWAP as both a target and a rejection zone, and we rejected it back to the upside at that time. So the question is, can you put on the trade right here? Yes, you can, if that is well defined in your trading plan. You can absolutely do that, but for the purposes of what we are doing right now, and that purpose is the 20 trade challenge, and again, inexpensive contracts. What we are looking for is we are looking for trades with the highest expected value. Now, this has a really, really high potential value. You look at it and you go, okay, it's got a good potential value, but you're below things you need to be above. Again, for calls, again, look at your 9, look at your 20. If you're going to play a double cross at a major level and a double cross, and that's the only thing you're focused on right now, you're not going to take that trade. So to answer your question, you're not going to put on that trade when that setup happens that you're talking about. You're going to wait specifically for that play at the major level. If it's too far away from the major level, you're not going to put on the trade. So the further you are from your major level, the more it's going to hurt when it pulls back, because we always expect a pullback. And the second thing is, the farther you are away from the 9 when you put on the play, the more it's going to hurt when it pulls back. And again, as 920 traders, we use the 9 and the 20 as support and resistance. Remember, and you're going to get that pullback. Now, if you're a long ways away from both the 9 and the 20, or the 9 and the major level, when you put that trade on, again, high potential value, but low expected value, look for rejection. Again, you're not above that 9 yet. So it's my recommendation that you don't put on that trade right now. You focus on that high expected value play. Now, here's the cool thing about trading. Once we have one setup, just to where, not to where we get it right every time, from an execution standpoint, not from a results standpoint, but we're not where we don't do it until we can get it right. We do it until we can no longer get it wrong. We can't get it wrong. So we're looking for one setup and become absolutely bulletproof. Become expert level with one setup. Remember, it's that one setup. It's that inexpensive contract. It's that $10 contract. And then we build off of that. This is hard to build off of taking aggressive plays. And it's hard to build off of aggressive plays because you are going to have more losses on aggressive plays than you will on a double cross at a major level. Again, your potential, when it hits, when it plays out from a potential standpoint, it's really, really nice, but you'll have too many losses. You'll add to your scar tissue, and then the cycle starts over of all the bad things that can happen when we trade, right? Would you agree with that? Would you agree? Again, that's my opinion. That's my opinion. We want to get so good at something until we can no longer get it wrong. We can't get it wrong. We execute. The execution says, okay, it's right there. Our edge is there. We execute. And again, the things that I say, folks, these are my opinions. These are just my opinions. But does that make sense? Does that make sense? And everybody else, does that make sense? And again, it's just my opinion. Again, we're trying to build those really, really, really good, strong trading habits. And again, the cool thing is we can build a whole strategy. We'll build the whole strategy around that $10 contract. You know, once you get this down, your play, whatever your specific play is, you become so good at that. You want to add something else into your arsenal, then you look at adding something else. You look at another one of the 4 different setups to get expert level at that too. And then you look for the next one and the next one. There's really 3 of them are really, really good. One of them is So 20 trade challenge, only trading double crosses off of major levels, them's the rules. Luis, your rules are your rules. But, my recommendation is to take a double cross off of a major level and a major level only. That play, because let's talk about, because it has the highest expected value. It's got the highest expected value. So we don't want to take high potential value, and we don't want to take low expected value. We want high expected values. The highest expected value of any of the 4 setups is the double cross at a major level, period. It's got that, and it's a known thing. So that in a way, exactly, you are going to master, you're going to become an expert, you're going to become elite level trader with one setup. And here's the cool thing. When you get there, because you will get there, Maybe that's the only setup you want to trade. Maybe you want to add to it. Maybe you want another specific tactic in the overall strategy. But that's it. You want to become absolutely expert level to where you can no longer get it wrong. Exactly. I mean, if that doesn't light your fire right there, guys, if that doesn't make you so excited and go, okay, all right, I'm done banging my head against the wall. I'm looking for one thing. That's it right there. A black belt in the double cross, a black belt, a double cross at a major level. If that doesn't get you exciting, I don't know what will. Again, guys, think about the days of worrying about all the scar tissue that you have built up for obvious reasons. For obvious reasons. Those days are gone. You're still going to have losing trades, and you're going to have losing trades all the time. And that's okay. We just execute. So Mark just said, crazy thing is, if you master just that one, that's all the money you'll ever need in your life. You are absolutely correct. That's it right there. That's it right there. That's it. Guys, I go back to Cale Sanderson. You guys know who Cale Sanderson is. Cale Sanderson. I told this story last night. but I'm going to tell it again. Cale Sanderson. He is arguably the most, well, not arguably, he is the most successful NCAA wrestler of all time. He won 159 matches. He lost none. He was such a good wrestler. He was well-rounded. He knew, everything. He was so really, really, really good. Expert level at everything related to wrestling. But there was one specific move that he the best in the world, probably the best that ever was at this one specific move, one specific tactic. It was called the ankle pick, and it was poetry in motion to watch this guy wrestle, because he knew what he was going to do. He knew the ankle pick was in play. His opponents knew that the ankle pick was in play. And you know what? They could not defend it. He was so good at that. He was so good at disguising his little fakes and feints and this kind of thing that guess what? They just got 159-0. And you could say that Dan Gable, yeah, arguably the best. He lost once. Again, Cale Sanderson, head coach, Penn State University. They are the cream of the crop, and he's the best coach out there. But he was the best wrestler, the ankle pick. One play is all you need, guys. One setup. One setup that's it. But again, once you master that and you want that next one, then you move on to that next setup. But Mark nailed it. Crazy thing is it's not if you master it. It's that when you master that one setup, that's all the money you'll ever need in your life. It truly is, guys. It is literally all the money you will ever need to make in your life. Singh says, I am just amazed at how you took the trade flawless like first trade today. I was like pre-market, all went up against the trend, but you were executed right away. Oh, you're talking about the, I lost on my first trade today. The first trade. And then, right in here, I said it, setting up to this trade. I said, guys, because it was just bouncing around. And I said to the group, and again, YouTube land, that's another thing I do. I tell the group exactly what I'm looking for before I put on the trade. And then when it happens, I put on the trade, period. So I was looking for this particular trade right here. I said, guys, this is exactly what I'm looking for right here. This trade, if this happens, I'm putting on the trade. And then I put on the trade, and it just worked. It doesn't always work, though. I take plenty of losses. I took a loss early today. I take losses all the time. We have to take losses. It's not even like we're taking chances, folks. It's our edge was there, so you put on the play. I had a questionable trade yesterday that I shouldn't have taken. So, yeah. But anyway. All right. So we're a little over an hour in, hour and 10 minutes, hour 7 minutes in. Anybody else have anything you guys would like to talk about tonight? The second trade. Yeah. And it's okay. Let's talk about. We will talk about Nick Saban. I'll talk about Nick Saban. Nick Saban is, in my opinion, the greatest college football coach of all time. Whether you like the guy or not, whether you like Alabama, hate Alabama, whatever it is, however you feel about him personally, he said this. I mean, he's a big discipline guy. He's like, just do your job. That's all it takes is just do your job. But he said you had 5 decisions to make every day. These are the decisions you have to make every single day in your life. And when we relate it to trading, these are the decisions that you must make. You can be bad at trading. Being bad at trading, you're just throwing darts. You're throwing crap on the wall and calling it artwork. It's really easy to be bad at trading. You just don't try. So you can be bad. That's decision 1. Kind of got to work to be bad at it. You can be average at it. That takes, that doesn't take a whole lot of work. You're just as close to the top as you are to the bottom. You can be average at trading. And again, some folks are okay just being average. And if you just want to be average, that's fine. You can be good at trading. It takes a little bit of work. It takes a little bit of study. You can be good at trading. You can make a little bit of money. Yep, you can supplement your regular income. Be good at it. That's fine. Again, that's a decision that you have to make every single day. You can choose. Again, this is one of the 5 choices that you make every day. You can choose to be excellent at trading. It takes a hell of a lot of work, guys. It takes an awful lot of work to be excellent at trading. More work than most people are willing to put in. Seriously, it's more work than most people are willing to put in. That's the 4th decision. That's the fourth choice. Or you can choose to be truly elite at trading. What does it take to be truly elite at trading? It takes something that literally very, very, very few people are willing to do. Very, very few people are willing to put in the work and to be disciplined enough. You need discipline to be good. You need discipline to be excellent. And you need more discipline than you can ever imagine to be elite. If there are areas in your life right now where you are not disciplined, it's going to show through in your trading. Your trading will reveal every blind spot that you have in your life, period. To be truly elite, though, folks, you're in rarefied air. My question is, are you willing to do whatever it takes? Are you willing to trade that $10 contract? Seriously. Are you willing to look yourself in the mirror and go, I want to know all about me. I want to know everything about me. I want to know every spot and wrinkle. I want to know every blind spot in my life so I can clean up not only my trading, but all of those blind spots in my life. Am I willing to do that? And again, it's your choice. It's one of the 5 decisions you have to make every single day. What kind of a trader do you want to be? Do you want to be truly the cream of the crop? Top of the heap? I think I know the answer. I don't think you guys would be in this group right now if you didn't want to be truly elite at what we do here. Here's the good news. It's available for everybody. It is. Guys, we don't have to be 6'5", 300 pounds. We don't have to be that. We don't have to, be the fastest runner in the world, the best swimmer, the best diver, throw a ball the fastest, hit a ball the longest. We don't have to be any of those things. Everything we need to have is in that precious real estate that's 7 inches between our ears. Do you believe that you will get there? It starts with the belief, the ultimate belief in yourself to actually be there. If you're a bad trader right now, that's okay. You don't have to live there. If you're an average trader or a good trader, you don't have to live there. You don't have to stay there. You're just passing through. You're just passing through. You want to be elite? Great. You're going to have to get through good. You're going to have to pass through excellent. There's not a single person in this group that does not possess the things that are necessary to be a truly elite, or whatever level, wherever level, whichever level you want to be. There's not a single person in this group that does not possess the skills that are necessary to be that trader. Period. Period. And again, it starts with that belief. Do you believe you can do it? I believe you can. It doesn't matter what I believe, though. It matters what you believe. Good. You're not jumping in and out of trades like a drunk fourth grader. There's that, Mike. Seriously. Seriously. Guys, we're just ultimately just watching lines on a screen. We're waiting for our setup. We're waiting for that. We're waiting for the ankle pick. That's all we're doing, folks. We're waiting for the ankle pick. We're waiting for that one setup. That's all we need. That's literally all we need. Once we get past that one setup, we become elite level with that one setup. That's our ankle pick. And then we move on to the next. If we want that next setup, it's the same thing. We have to go through that same grueling process. Although you already have your process, you're just tweaking a little bit for that next setup. Now, if you find that your expected value isn't as great with that type of setup, then you don't even worry about it. Seriously. You don't. You just wait for your setup. Okay, there's my setup. You realize that there are traders. I'm talking about day traders that will go days without putting on a trade because their setup is not there. They're looking for something so specific, and when it happens, they go in and they go in heavy. They'll go days without putting on a trade. Seriously, days. I'm not talking about, it's 10 minutes in and I haven't taken a trade. No. Days. Edge, trade, no edge, no trade. Anyway, folks, that's about all I have for tonight. We're about an hour and 15 minutes in. We're going to do it again tomorrow. Now, I have a doctor's appointment first thing in the morning, so I might be a little, well, I will be a little bit late tomorrow. It's a blood draw, not a big deal. So I will be a little bit late. The chart will be set up, the room will be open, so everybody will be ready to go with that. So, yeah. Anybody have anything else? Does anybody have anything else? And I'm gonna say this to YouTube land right now. You guys know the whole thing about liking and subscribing and all that kind of good stuff because we're on YouTube. Like, subscribe, leave us a comment. See you, Mark. See you, Mike. Now, if you are interested in live daily trading, where we do this every single day, thanks, Mike. Thanks, Luis. We do this every single day. We talk about all these different setups all day long, and we talk about the psychology of trading also. If you're interested, head on over to our link. It's down below. Thank you, Sing. It's down below. What's our group called? Well, it's pretty easy. It's our Discord group. It's called 920 Trading. We're going to give you that first week for free. If you like it, join. If not, okay. If you will like it, I'm telling you right now, you will like it. You will find value in what we do. Anyway, folks, for everybody out in YouTube land, thanks for being here tonight. I hope everybody has a